Okay, thank you very much for attending today's webinar. It's the LCG Market Analysis webinar. My name is Jasper Lawler. I assume by this time you probably had enough chance to look through the risk warning on the screen. So I'm going to take us through to our slide here, summarising what's happening news-wise, potentially big news events this week. So we've got the Fed meeting. That's probably number one on the list. That's on Wednesday. The Bank of Japan meeting the following day on Thursday, well, early hours Thursday really. Interestingly, at the same time, we've just had Prime Minister Abe call a snap election for next month in Japan, so a little bit of potential political upset on the cards there. Obviously, I think he's found it sort of opportune timing to call this election in and around this time that there's been missiles being flown over the island from North Korea, and one of the risks for the world, in fact, from this election is that maybe it will bring with it the rearmament of Japan, changing their constitution after it was changed after World War II. So that's kind of major. But we'll wait to see what happens there. Mark Carney has already been speaking at the IMF, I believe, making a few comments. Obviously, that's on the back of that strong rise in the pound. I think he hasn't actually spoken yet. He's speaking later today, so that'll be something to watch out for. The pound's coming off a little bit at the moment. Maybe partly a bit of exhaustion, I would say, is probably the biggest factor, but also Boris Johnson's article making a bit of a Brexit intervention. Maybe a bit of a leadership crisis in the making with Theresa May. So a bit of political instability being thrown in there perhaps by Boris, so pound coming off a bit. So that obviously begs the question, will the pound continue its rally this week? I would say so. It looks like a breakout to me. Obviously there's going to be some pullbacks, but we'll look at the chart in a bit more detail in a minute. Another potential kind of global political situation is that the US is trying to deal with North Korea, and actually Secretary Mnuchin has basically threatened putting some economic sanctions on China if China doesn't go along with the extra sanctions that they're proposing on North Korea. So that that has its risks. You don't really want to see the US in a trade war with China. For one reason, China holds a lot of US Treasury debt. If they decided to start selling US Treasuries, start dumping the dollar, that's the world financial system in major trouble. Not too likely, but something to bear in mind. It's German elections on Sunday. We're going to look in a minute at a breakout in the DAX. Looks like the market's weathering any potential storm there. It looks like Merkel's going to sail into power once again. So, and there just isn't the kind of existential threat to the euro this time around, but still some potential for fireworks. So we'll have a look at the DAX and the euro and what it could all mean. And obviously I'm having a specific webinar, firstly with my colleague IPEC on Wednesday, previewing the Federal Reserve, and then again on Friday, previewing the German election. And last but not least, S&P 500 and the Dow both hit record highs last week. First time the S&P 500 hit 2,500. So let me drag the LCG trader in here. I know you guys prefer the white backdrop, so let me switch that. There we go. So let's start with the euro. So here's the thing. Here's the question with the euro: is this are we seeing the end of this uptrend? We basically made it to pretty much 121, but obviously 120 is the big line in the sand. We're around 119.50 at the moment. So we had a bit of a sell-off towards the end on Friday, a bit of a dip on Sunday, and I'm putting the wrong handles here, but a rally came off the highs on Friday, dip on Sunday, and now we're kind of pushing to the top side again after a little drop early on. So at the moment, we're still on a kind of longer term weekly basis. It's a clear uptrend. We're making higher highs and lows. We're kind of holding above the rising trend line. It's a bit of a steep one, in all honesty, and in the RSI still very much in positive trend territory. Maybe the only 2 points of concern is we had this long wick candle here when we first hit above 120, showing a bit of a reversal at the round number. We closed above 120 the following week, and then last week we obviously dropped down but weren't able to take out the lows here. I think the point in which I'm going to start getting a little bit more concerned about this is probably, not concerned, but when I'm going to start thinking more there's a possibility of a reaction, is when we get down through 117.50, when we had that big bearish engulfing candlestick and we've had a few lows and peak highs in around there. If you want a slightly more aggressive level, I mean the open and close from last week, maybe around this 118 level would be an area to look out for, because we just haven't had a close through there for a little while, and that was this little spike high from back here as well. So people have got their eye on 118, and of course, you know, once we drop below the 70 level, I mean that could be a catalyst for some buying because it will be out of overbought territory, but it's also a bit of a sign of a weakening trend. So not really much evidence on the weekly chart of a major turn lower, but if we pull down to this daily chart, this is when we have this kind of basically a double top with these two long wicked candlesticks, two sort of shooting stars. Well, really I guess eventually turn into evening star reversals right and around the same level. So again, looking for a bit more, we've had a sell-off, that went to new highs, but that was a bit of a stop run, and we've had a sell-off. Now it's a matter of how far does this little rebound that we're in right now take? You know, do we push back above this this broken trend line again? Do we push right back into the highs for something akin to a triple top, or do we start rolling over a bit sooner? I would just keep an eye on the round number 120. Does that hold or not? You know, if we see another sell-off from 120, or if we don't even get there, you know, we've had a sell-off here, we have another one, and take out the lows from Friday, then you know it's a little bit of confirmation of weakness, and I think that's when we could start to see the market start to roll over, and that's when there's the opportunity to drop down to that 1750 that I mentioned, or indeed the last kind of major swing low that we had, which I've got marked on the trend down here, is about 116.70, maybe 117. Should be a bit more conservative on it. Dollar yens I think is a bit more interesting because, again, pulling out to the weekly chart, we weren't able to take out the range lows. Basically, we weren't able to close the week lower. We had a massive bullish engulfing week last week. That's a bullish indication. We're not in a trend, but it was a large bullish engulfing off of out of a range. Engulfed several weeks actually. Right off that low here around 108. So to me, it looks like we're going at least to test the top of the range again. It would look like. So if that is the case, and we are pushing a bit higher, then what we're looking for is a continuation. And this was a good end to last week where we tried to push lower from the top of this range, but we finished well off the lows. And we finished the day higher. Obviously, this is a little gap open on Sunday. Maybe this gap gets filled down to the top of this range again, which is, or maybe we even try and retest 110.50. But then I would imagine that the trend can continue. So I'd categorize the main levels here as just 110.50, and then if we drop below this trend line again down to 110. I'd say the momentum seems to be waning, and I wouldn't be so confident. But nonetheless, what we're really looking for is just some sort of pullback into this bullish engulfing week as an opportunity for an expectation that continues. Moving swiftly on to sterling, which is obviously the big mover from last week. We had some massive moves. We're rolling over a bit today from the 136 level. Let's just get some context to this from the weekly chart. So, I was expecting maybe some sort of pause around 135 as we approach those kind of post-Brexit highs, but we didn't get it. So the market's looking really firm right now. So obviously a bit overextended, but to my mind, this is a breakout. The strength of these moves is not you know, the risk is that it's kind of a last exhausted move before the market rolls over. But to me, you know, the trend is very much to the top side at the moment. It's just if you do think this is the top, you know, it could end up being right, but to me there isn't any proof of that yet. So moving average is nicely aligned on the weekly chart. If I add in what am I doing here? Objects. Oh, sorry, just there we go. That's what I was aiming for. Do you know what would have been easier to just use my template? I think the colour's a bit more generic. So yeah, making high highs and lows, moving average is the line for an uptrend, big, solid, strong move, breaking through resistance. All is quite bullish from my standpoint in the greater scheme of things. But obviously after a move like that, you'd expect a little bit of a drop. So what are the key levels? I would call that 134.50 kind of area, which was basically those highs that we broke through, as kind of key level number one. And then probably key level number two is just that breakout area here back at 132.50. So they're the kind of key, you know, if that doesn't hold, you know, I'd expect some kind of give way down to this sort of level here. Maybe just watching out for if people trying to get in early, maybe it'd be in around here, which would be a 133 as a potential area where the market dips back to. But even that would be quite a large decline. If you want, you know, another thing to do to see if there's any kind of matchup is just to see there's the 50% level. So we basically we kind of climbed about 1% each day, and so actually if we just unwind all of those gains from Friday, that would take us down to about 133 80-ish. Well, it says exactly here 133.85. And that's also 50% of those 2 days of gain. So maybe that'd be another sort of area for people to look for this trend to continue. And just quickly on the pound again, obviously we had a massive week in, that's a couple of weeks really in euro sterling. So we dropped all the way down from 92 and change down to 88. So you know, really looking for a similar sort of thing here. You know, I think to my mind we've held a big long-term level here. We've dropped off significantly. Moving average is still positioned for an uptrend, so that's why you could see some aggressive bounce back, and it's right from around this area where the week paused, which is these two highs here. So early days yet, but if you start to see some reversals in this vicinity, in this 88 type vicinity, which is also where the market consolidated for a long time, you know, that does make sense. You've got the moving averages, you've got the support, potential support on your side, but the potential downside, the risk factor, it was obviously there's a big move to the downside. Do you really want to try and catch that falling knife? And we've broken that fairly steep up trend line on the weekly chart. So you know, it's just one thing to keep in mind is it's a Sunday bar, so you know, no particular, not as much meaning in terms of an inside day pattern, because there are obviously always little tiny days on a Sunday because it's only open for a couple of hours. So yeah, obviously as a result of that that drop in the pound, that rise in the pound, we're seeing a drop in the FTSE. That's been the correlation for a long time. We gave up that key 7,300 support, and if we pull out to the weekly chart here, you know, you can see here that I would just call that 7,100 really, or maybe more like 7,090 as the kind of key next level of support. That to me it would make sense for us to need to test that first before the FTSE finds its footing again. We are right around the 50-week moving average, but that's not necessarily historically a really, solid area of resistance. You see, it has been a little bit in the past, but it's more of a kind of guidepost for the actual direction of the trend, which again, you can see on this weekly chart, the 20-week moving average kind of flattening out a bit here, which is obviously goes along with the fact that we didn't really make much progress on the price since peaking out post the election, and the 50-week moving average still trending higher, but obviously the price has shifted just a tad below it. So a couple of bearish developments here. For me, just the key one being we're taking out that big support level. You know, the fact that we held for that long, there were so many tests found that it's broken, adds to its significance. And so while I wouldn't get wholesale bearish the market, I do tend to think we're going to get a bit more strength in sterling, and thus I do tend to think we're going to get a bit more of a sell-off in the FTSE. And 7100 for me would be the next key level of support. Now we're in the DAX, where the situation's looking a bit differently. We'll have to see how today's candlestick plays out. If we do get something that looks a bit like this, an evening star, pin bar, whatever you want to call it, long-wicked candle, that would be pretty akin to a false breakout. So we've obviously just tested the 12,600 mark, so people selling that round number for the time being. And makes some degree of sense, because you can see this, basically the price level that we're at the moment, where we closed a few days, where we tested a few days last week, is a bit of a kind of pivot level for the price. If I pull out the weekly chart a bit, you can see the old record highs were back there. You know, this was kind of the base of this little sideways movement, which we broke above, dropped through. Now we're retesting it from the underside. So it's, you know, the moving average is all aligned in a kind of bullish fashion. We had a kind of break of the down sloping trend line. So again, looks fairly bullish, but we're just entering a potential area of resistance here. If you are looking to buy a pullback, then I would just categorize these two highs here around the sort of 12,330 mark as former resistance turned to potential support, and then the clustering of these moving averages together, which is just a bit lower, around sort of 12,270, could be an area for the market to pull back and re-begin this uptrend. So yeah, I did mention the German election. Obviously not much sign of jitters so far about the German election, and you could probably say that some of this decline was in case things went awry. They don't seem to have done so. You know, a bit of correction heading in the week, couple of weeks before the election. It's been a pattern that we've seen before, where the markets get very confident in the result, start placing bets on the result a couple of weeks before the election. Obviously in the case of Brexit and Donald Trump, got it pretty wrong. So certainly scope for that. Be plenty of volatility where Merkel to be rejected at the voting booths, but it just doesn't seem that likely if you're going to trust the polls, which again has been a bit of a mistake in the past. So new record highs on Wall Street. Maybe for the sakes of saving time, I can just skip straight over to the S&P 500, where this is the weekly chart. And you can see we're just making successively higher highs and higher lows, the uptrend fully intact. And obviously we had this little kind of North Korea based sell-off for a while, but then we held 2400, and we had that large pin bar, large hammer pattern on the 28th. And we've basically been rallying since then. We held the moving averages and we popped to the top side. So you know, I think this, you know, we've hit 2500, which is a big round number, but we had stalled just before it anyway. So I'm not sure that just the round number itself is enough for a correction after we've had this breakout. So I would consider basically these recent lows around 2490, even a bit more aggressively the little breakout here around just 2500, basically 2497. Is where we could just keep making progress from. Were the market to roll over and take out these highs, you know, I think we maybe don't even need to go much further beyond these kind of peaks here and this peak here that we broke through, where resistance would turn support, and that's around 2480. Targets to the top side, difficult when it's record territory, obviously, but you know, the round numbers always make sense as targets, or at least just before them. In case you get a little bit of early selling. Switch back to commodities. Yeah, this chart's looking a bit messier than it needs to, really. It makes more sense on a weekly chart. Big trend line been taken out here. It's not the most intuitive trend line necessarily, but the number of touches would imply to me that it is being respected. And we've obviously had the breakthrough of that last week, where we attempted on multiple occasions to drop through. Price tried to pull back through the 20-week moving average, failed to do so, and we've broken out of this little miniature triangle pattern here, and we've broken above this big long-term pattern. So that's why I mentioned in the week ahead video that it's one of the reasons why I'm getting increasingly confident in the oil market. Probably need to continue decline in the dollar for this to happen. So we'll see what happens at the Fed meeting. But looking like a bit of a breakout here. So first challenge is obviously these peaks here. So if you are looking for short-term opportunities to get long the market, I'd be like looking at resistance around 57.50 really, which is these peaks here. Even 57 if you're being a bit more conservative, is a resistance area that has to get through. But certainly looking for some sort of pullbacks, and just looking at the previous high here, which comes in on the kind of 54.80 mark. You can see that was initially respected, but we bounced nicely. And then you just, if that 54.80 failed to hold, maybe we need to go retest this low again, this spike low here around 53. But market looking fairly positive at this point from my perspective, but some quite big resistance coming up. So gold, let's kind of pull out this weekly chart a little bit. This Fibonacci is making it look a bit messy, but basically we were obviously in a range. On a long-term perspective, we tried to break through 1200, weren't able to do it, and we've rallied pretty nicely since. Rally got a bit exhausted around 1350 as it was approaching these peaks from last year. So we're getting a natural pullback from the kind of resistance, if you like. So we're coming down to 1300, which to me would be a fairly decent line in the sand. 1300 matches up quite nicely with the 38% retracement of this rally, and it's also just beneath there around 1295 is the resistance of that range that we were in before we got the breakout. So if it comes down to retest the top of the range along with the 38% fib and the 1300 level, we've got a few things lining up there as potential support. If that were to give way, then you could look down to the 50% retracement, which comes in about 1280. The Fed meeting this week obviously going to be fairly key for gold. If we get a bit of the dollar has been recovering a bit, and hence this drop in gold. So if that picks up steam, then that's obviously not so good for gold. Doesn't help the prospect of these levels holding. What we could look at is a scenario where maybe the Fed come out with something fairly hawkish, causes a bit of a rally in the dollar, sell in gold, but then it still holds these levels on a longer term bullish outlook. So I think I've covered all the markets I wanted to here. Not had any requests for any extra markets to be covered, so I think I will wrap it all up. Sorry to those who missed this because it was on the earlier time of 11:30, not 12:30. I know that doesn't suit as well for lunchtime. I just had a TV commitment that came in, so I had to rejiggle the times a little bit. So apologies to those, but it will be on YouTube later today, so hopefully you'll be able to catch up with it. Cheers, Jasper signing out. Have a good week trading, guys. Thanks a lot.